traders, John Fortune here with this week's weekly Forex forecast for the 4th of March to the 8th of March 2019. As always, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in the coming week and also for the weeks ahead. So let's jump over to the charts and see where the money is this week. As always, starting with the US dollar index. Now, last week we came down and we traded from the 96.68 all the way down to the key area of support at 95.98. We did get a bounce from here and we're making our way back up towards 96.98. So as we go into this week, we are in a range between the 96.68 and the 95.98 in the US dollar index. So very simply put, what we're going to be looking for is we're going to be looking for price to trade into the top of the range at 96.68. If, like we had last week, we start to see in this area bearish formations and patterns, this is going to be a place we're going to look for further declines in the US dollar index. And we're going to be looking back down to the range bottom at the 95.98. If we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 95.16. Now you can see that we have this larger area of resistance up at 96.98 as well, and the reason this is black and we have the green target out here is because if we are to break above the 96.98, we wouldn't really turn fully bullish on the dollar index until we got back above this key area of resistance. You can see in the past, once, twice, 3 times this turned price back towards the downside. So we'd have to clear the 96.98 to be fully bullish. For the time being, we're looking to play this range with the possibility of a break down towards the 95.16. Because we go into next week inside a range in the dollar index, we're going to go into next week with a neutral bias on the dollar index. And this just means that we're going to be trading the charts on their own merit without a strong bias in the dollar one way or the other. So the next market we're going to look at is crude oil. Now we start the week above a key area of broken resistance from the past, already turning support once at the 54.74. If we can get a pullback and if we can get a retest of broken resistance turning support, this is going to be an area we're going to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside and target set at the 59.29. And for those of you who know your corrective waves, this would form what looks to be developing as a flat correction. So the next market we're going to look at is euro dollar. Now last week we traded into the near-term resistance highlighted at the 1.1417. We are stuck between the 1.1417 and this key area of support down here, which is a larger area of support than this is. This is why this is dotted. This is near-term resistance. This is medium-term support. And as we go into next week at this key area of resistance, we are looking at this as being a place we're going to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key area of support to the downside in the target set at the 1.1290. And if we can get back down into this area, because we are between near-term resistance and medium-term support, this is an area we can start once again to look for potential bullish formations and patterns. We're going to be looking back up to the range top at the 1.14170. If we do get a move down into the 1.1290, which looks possible because it looks like if we're counting this from the bottom, it looks like we have 1, 2, 3, 4, potentially 5 waves, so usually followed by a correction. This would actually form the basis of a bigger inverse head and shoulders, and this is why in this area we would once again start to look for bullish formations and patterns to see if we're going to get this back to the upside and possibly even a break through the 1.14170 all the way up to the top of the 1.1500. Now just very quickly, a question I get asked a lot is when we're approaching these levels here, we are looking for tradable patterns. So we do, in this instance, if you're looking to short at resistance, you need to have a confirmed bearish pattern. This is why we say bearish formations and patterns, which is tradable in order to initiate those positions. Otherwise, guys, what can happen is if you're starting to trend to the upside especially, you do not want to just be shorting resistance, because what can very easily happen is you can trade into this, we just form a bull flag and we just break through like this and we continue up. Okay, so when we're looking at these levels and we're looking to initiate positions, we are looking for tradable patterns to form at those areas. In this case here, you can see we're starting to develop, just to give you an idea, we're starting to develop a head and shoulders pattern, which is a reversal pattern to the downside. However, we haven't confirmed it. We're actually testing the lows down here, so it remains to be seen whether this pattern will hold up. So we do need to see these patterns forming at these areas in order to initiate trades. You will see sometimes if price just trades straight through and we do not get a confirmed bearish pattern like this, we're just simply looking to reverse this to the upside. Okay, so I hope that answers the questions that some of you guys have been asking. So the next market we're going to look at is pound dollar. Now we start the week having traded into a key area of resistance at the 1.32980. So we are between medium term resistance and near term support at the 1.3112. If we can get a pullback and we can get a retest of broken resistance turning support at the 1.31120, we're going to be treating this as a range bottom, and we're going to be using this as an area to start to look for bullish formations and patterns. We're going to be looking at initiating longs back up to the key area of medium term resistance at the 1.32980, and if we can get a breakthrough here, we're going to be looking up towards the next key area of resistance to the upside and the target set, the 1.3450. Just bear in mind, when you get a key area of resistance like this and you're still trending to the upside, we have this near-term support here. This can turn into a bit of a range, but ideally we still want to be trading in the direction of the near-term trend, looking for this break of resistance at the 1.32980. So the next market we're going to look at is US dollar Japanese yen. Now we start the week above the key area of broken resistance from the past, but we are also coming towards a key area of resistance at the 112.230. So very simply put, because we are now approaching this near-term resistance at the 112.230, this is an area we could start to see the trend reversed in the US dollar Japanese yen. So if we can trade into the 112.230, we're going to be looking in this area for potential bearish setups. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at initiating shorts back down to the key area of near-term support at the 110.96. Now, just something to note with the US dollar Japanese yen, we saw last week the US dollar index decline to the downside, and at the same time we had the US dollar yen moving to the upside. Now this is why we use the dollar index as a compass, and some weeks we will go into it without a strong bias one way or the other. Because and people get this wrong all the time, just because the dollar index moves in one direction, it does not mean, let's say the US dollar index moves to the downside, it does not mean every dollar pair will necessarily move to the downside, especially if the dollar index is bearish to neutral. And we saw this with US dollar Japanese yen last week. We saw the DXY declining, US dollar Japanese yen moving to the upside. So just bear that in mind, guys, because some people, they under the impression that if the DXY moves one way, the dollar must be moving in every single pair that way, because you have to remember the key word here is relative. Okay, so yes, the US dollar index, which is the dollar against a basket of currencies, declined to the downside last week, but even though the dollar was weak, relative to the Japanese yen, it was strong. Okay, so just bear that in mind. And this is why, if there is no strong bias on the dollar one way or the other, we trade these markets on their own merit. So the next market we're going to look at is Aussie dollar. Now we've been ranging between the 0.7185 and the 0.7070 for the last couple of weeks. We go into this week at the range bottom. So very simply put, we know ranges do not last forever, they do eventually break out. However, as we start the week at the bottom of the range, this is an area, if we are going to get another bounce to the upside and a test of the range top, this is an area we're going to start to look for potential bullish formations and patterns. And if we get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs back up to the range top and the key area of resistance here at the 0.7185. So the next market we're going to look at is New Zealand dollar. Now we start the week again inside a range in the New Zealand dollar, which is not surprising because the dollar index itself is fairly neutral. We are approaching, since bouncing from the key area of resistance at the 0.6893, we are approaching the range bottom at the 0.67580. So we're going to be looking for price to come down and trade into the range bottom at the 0.67580. This is going to be an area we're going to start to look for bullish formations and patterns. And we're going to, very similar to the Aussie dollar, be looking to play the range until it breaks. And if we get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs back up to the range top and the key area of resistance at the 0.6893. So next pair we're going to look at is US dollar Swiss franc. Now we start the week below a key area of broken support, looking to turn resistance at the 1.00280. If we can get a pullback, and if we can get a pullback and a retest of broken support turning resistance at the 1.00280, this is an area we're going to start to look for bearish formations and patterns. We're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 0.99080. And if we can get a breakthrough here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 0.9877. So next pair we're going to look at is US dollar CAD. Now last week we were actually trading below the key area of broken support turning resistance at the 1.31970, and we had this reversal to the upside off the back of that poor Canadian GDP data on Friday. And so very simply put, we go into this week above previous broken resistance, looking to turn support at the 1.31970. If we can get a pullback, and preferably if we can get a pullback and a retest of this area of the 1.31970, this would be the best place to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 1.3370. Now this is highlighted in black as this is an area which could start to push price back to the downside, back down towards this key area of support here at the 1.31970. So this is an area we can start to look for bearish formations and patterns, especially as we have a medium-term resistance area just above it. So this is 2 times over a good place where we could start to see price pushing to the downside. And if we zoom out very slightly here, you can see that this is an important reference point, because this essentially, not quite, slightly just below here, but essentially this denotes the reference point of this potential reversal pattern, known as inverse head and shoulders. So above the 1.3370, and we would really want to come above the 1.33860 as well, just to make sure. Above this area we would have a confirmed head and shoulders breakout, and we would be looking up to the 1.35640 in that case. But very often when we come up into these areas, these are also places we could reverse trends to the downside. So we're going to initially be looking to see if we can get those bearish formations and patterns in this area. And of course, if we just trade straight through it, we will just be using this as broken resistance turning support, looking further advanced to the upside in the US dollar CAD, and treating this as a bigger inverse head and shoulders reversal. And last but not least, we have gold. Now last week we failed at supporting gold and we had this big sell-off to the downside. We are approaching a key area of support at 1284.10. Going into next week, if we can get a further move to the downside, and if we're looking for a correction first, there may be a trade here to the downside, but what we're looking for primarily is if we can trade into the 12840.10, this is going to be an area, as overall, despite this near-term sell-off, overall gold is still trending to the upside in the larger time frames. This is an area we can begin to look for potential bullish formations and patterns. And if we get those bullish formations and patterns in this area, this is going to be a place we're going to start to look to initiate longs. And we're going to be looking up towards the next key area of resistance to the upside and the target set at the 1320.67. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. I want to wish you all a nice weekend, what's left of it, and I hope you all have a profitable week next week. Take care, and don't forget to trade safely.